Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure recognize two official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
Hello everyone, welcome to Chingy. Good evening. Today is Tuesday, October 14th. I'm analyst Jiang Jida. Before class, remember to like, subscribe, and share. If you have investment questions, leave a comment. If I don't answer today, I'll respond in tomorrow's class. As usual, I'll also answer yesterday's student questions. The market has been extremely volatile recently, so I want to remind everyone to be especially careful with positions when trading. Make sure to manage your risks first before thinking about how much you can make. That's still the most important thing to focus on in trading right now. Alright, let's start by looking at today's investment highlights. First, we have an extra dove. Yesterday, we discussed black swans. Today, let's talk about doves. What exactly is a dove? It's related to monetary policy and Federal Reserve officials. Today, there's an extra dove, a new Fed official, a newly appointed president of a Federal Reserve Bank. His name? I think it's Paulson. He's a newly appointed president. Why do I say his stance is more dovish? So, what exactly was discussed today? And why will this have a significant impact or play an important role in the execution of next year's monetary policy? We'll talk about these related topics with everyone today. Also, there's a new big player supporting the US stock market. Who exactly is this new backer? Why are they able to prop up the US stock market? As we mentioned at the very beginning of the show, some viewers in the chat room asked about this, asking who it was. JP Morgan mentioned some related investment strategies today. The fact that JP Morgan is putting forward such a huge amount, about 1 to nearly 2 trillion US dollars, makes it especially important to know which industries they plan to invest in. And this major backer's role in reviving the US stock market is, of course, also crucial. Right now, as we can see, the US-China trade war is raging on, and with the upcoming APEC summit at the end of October, where the two leaders, Trump and Xi, will meet, and even looking ahead to November 10th and the next round of the US-China trade war, there's almost a month in between these key events. Exactly what actions China and the US will take, and what declarations they'll make, are still huge unknowns. At this time, with this new major investor stepping in to revive the market and make public statements, it actually helps to boost confidence in the US stock market. So, in a moment, we'll take a closer look at what this new backer, JP Morgan, has actually said. Also, on the industry front, Broadcom, there's news today that Broadcom has joined in on this. Broadcom has joined the big AI family, joining the AI perpetual motion machine. They're reportedly collaborating with OpenAI to jointly develop and self-design AI chips. This isn't news, it's old news. Why do I say that? Because this news came out September 5th. It was announced a few months ago, on September 5th. But at that time, the market was just full of rumors. So, whether Broadcom joining OpenAI is good or bad, and whether it will boost stock price or positively impact future developments, these are all topics we'll discuss tonight on Kunin. Chris talked about Apple's water temperature phone. What's a water temperature phone? It's a phone that's just lukewarm, a water temperature phone. This water temperature phone is related to the mainland market. Previously, in the mainland market, we know that when Apple launched the iPhone 17 series, whether it was the standard version of the iPhone 17 or the actual Pro or Pro Max versions, sales have been exceptionally good across the board, but for the thinnest air version, due to certain regulations or some technical issues, it hasn't been available in China until now. However, today they announced that it can finally go on sale. So, what exactly are the features of this Air version, and will it have an even greater positive impact in the Chinese market? Apple's water temperature phone is about to go on sale, and the launch date and timing are also important. Remember this clearly. We'll discuss this in detail during the focus segment today, then everyone can join. Hello everyone, Huiwan Wanshi, hi, good evening. My Daisy asked today about the large trading volume. Today, trading volume was high, but the market opened high and closed low. It dropped over 100 points, seeing a massive trading volume of 680 billion. Whoa, that's a huge spike with a long bearish candlestick. Quick conclusion, pay attention to this long bearish candlestick, just be cautious. Honestly, whenever you look at the market, index or individual stocks, there's a basic concept to keep in mind. If the index is in a relatively high plateau area, or if a stock is at a relatively high price, Whether it's hitting a new high or for any other reason, if you see a big drop with huge volume at these high levels, you need to have a basic sense of risk. Because a sharp drop with heavy volume at the top is usually not a good sign. Alright, not a good thing, even if after that huge volume there's another push to a new high. Because new record volume doesn't mean a new record price. Let me say it again, new record volume doesn't mean a new record price. That massive 680 billion volume could reappear, unless the index hits a new high. But when that new high appears, it's a signal to take profits. Remember this. A surge in volume during a drop is not a good sign. It means people are cashing out. Whether this relates to the settlement of TSMC doesn't matter. With heavy trading volume, everyone still needs to pay more attention. Alright, in Mingyan, good night. Also, Flying Fish, good evening, Coco Lee, good evening, and Melissa Chan, as well as Alice Fool, good night. Air is selling poorly. Sigh, I'd rather get the Air. iPhone 17 is still the Pro Max. I remember that orange one, people say that orange phone. So, some people jokingly call it the DeLong Freight phone, or the Thai milk tea phone. There are even people who call it the Shopee color phone, because its color is kind of, well, it's in the orange family. But anyway, no matter the version, it sells well, really well in fact. Today I'll discuss how the Air version is doing in mainland China, market temperature, sales, the real situation. For today's numbers, a quick update. No particularly important economic data tonight, except for the one at 6 p.m. just now. There was the release of the US NFIB Small Business Optimism Index for September. The previous reading was 100.8, the forecast was 100.6, but the actual figure dropped to about 98.8. Some representatives said that with the ongoing uncertainties and disruptions from the US-China trade war, how confident are people in small and medium-sized businesses? It's still relatively weak, and the volatility is quite high. Alright, now to answer a student's question. Yesterday, Jeffrey asked, if the government shuts down, does that mean no data will be released at all? No, not all data will be withheld. Some data will still be released, some data will continue to be published. For example, to put it most directly, like the US Department of Labor's Bureau of Statistics, they might be on break and unable to release data. That could affect things like the unemployment rate, non-farm payroll numbers, maybe the CPI, and so on. But as you can see, in the past week or two, over these 13 days. During this period when the US government was shut down, there were still a lot of economic data releases, including things like the NFIB Small Business Optimism Index, PMI data, PPI data. Actually, there was still a lot of data coming out. Even some high-profile releases, like the ADP Private Payrolls Report, were still published. So, there was still a lot of data available for reference. Although you might not be able to see things like the labor force participation numbers, non-farm payrolls, or the unemployment rate, the Federal Reserve still had plenty of different data points to refer to in order to determine whether monetary policy should move toward rate cuts or remain unchanged. They still have enough tools to make their assessments. This happens to answer a question from yesterday. Let's look at officials and investment institutions' positions. This is especially important. Why did I say today, in the investment focus, the first thing I mentioned was a dove, not a duck. Yesterday we talked about swans, today doves. So, what about this dove? Of course, a dove represents the Federal Reserve leaning toward a more accommodative monetary policy, moving in the direction of rate cuts. It's considered more dovish. Doves and hawks are two opposing ends of the spectrum. Hawks are more aggressive, leaning toward tightening, supporting rate hikes, and not supporting easing policies. So, those who are less supportive of easing and more in favor of tightening are considered hawkish. If an official tends to support a more accommodative monetary policy, hoping for rate cuts and easing measures to help save the job market or the overall economy, then their stance on rate cuts is considered more dovish. Today, there's a committee member you get to know a bit. She's a woman. At first, by her name, I thought she was a man. Her name is Bao. Her name sounds similar. Alright, Teacher Bao, good evening, Anna. As for Balsan, why am I specifically mentioning her? Because she will have voting rights next year. Let me say it again, Balsan, you need to remember this person, because this year isn't over yet, there are still 3 months left. Next year, those with voting rights include Balsan, so her name will come up often next year. If it comes up a lot, I'll teach you all how to remember it. As for next year's votes, there are several people who have them. Rotation, I give slogan, remember, you'll know. telling you about Balsan. Balsan holds a voting seat for 2026, president of the Philadelphia Federal. She said she supports it this year. She supports 2 more rate cuts, meaning in October and December. She supports a quarter-point cut each time to help support the labor market. Then she talked about tariffs. She believes that, at this stage, there are no conditions for tariffs to keep pushing inflation higher. In other words, she said that in the coming quarters, inflation and prices will rise because of tariffs, but this isn't a long-term thing. It's not a situation that will persist over time. He believes that long-term inflation is still at a stable stage right now. In other words, he thinks that with Trump's tariffs being on and off, sometimes imposed, sometimes not, sometimes making a fuss, sometimes not, in this kind of situation, he thinks tariffs do affect prices, but it's more of a short-term impact. So, given this context, since the effect is short-term and the long-term impact isn't significant, he believes there should be another quarter-point rate cut in both October and December this year. That should be appropriate, and regardless of whether he has voting rights this year, at least he will have them next year. Based on his current stance and comments, we can anticipate that his position on monetary policy next year will likely still be relatively leaning toward a certain direction. Leaning dovish, of course. Being dovish means a more favorable outlook for the economy and the stock market, because rate cuts themselves are generally beneficial for the economy and the stock market. So, if you do the math, among the officials of the Federal Reserve, next year, the chair of the Federal Reserve will be replaced. The new chair could be Waller, Hassett, or other executives like those from BlackRock, and so on. In my opinion, right now, the current board member Waller has a relatively high chance. If next year the Fed chair is replaced by a dovish one, whether it's Waller, Bowman, or even the new board member named Milan, adding them up, that's at least 4 votes. If you include Paulson, who will be a new voting member next year, then Trump should have at least 5 votes in total. With 5 votes, okay, so for each vote, there are 12 voting seats. In other words, if you get about 6 or 7 votes, basically the monetary policy is set. So next year, or even this year if Trump puts in a bit more effort, if he sways 1 or 2 more committee members, next year's monetary policy will likely continue to move in a more accommodative direction. That's pretty much certain. Just pay attention and remember Paulson. If you can, make a note, because as things stand, there will probably be 1 more dove next year. This is favorable for rate cuts. Now, about Bessent. What about Treasury Secretary Bessent? Bessent said that the government has basically been shut down for 13 days now. 13 days, honestly, that's not that long, not even half a month yet. In the past, during Trump's administration, there was one time, in 2018 or 2019, when the government shut down. How long was it? 35 days. You can imagine, government agencies can actually shut down for 35 days. Of course, the important departments won't close, like the Department of Defense, or some medical agencies and so on, those probably won't shut down. But let's say they're talking about a 13-day shutdown. But military still has to get paid. If you don't pay soldiers, how could they fight for you? That's not possible. Military pay can't be cut, neither can hospital nurses. Who can be cut? Who can be shut down? Museums. Because what do museums have? They just display people's things, right? Like some archaeological artifacts, maybe some mammoth bones, or the skeletons of T-Rex or Brachiosaurus. So basically, it's not a big deal if you don't go see those things. It doesn't matter if you don't visit the museum. Even if the Forbidden City closes, it won't affect our daily lives. Museums can be closed. Zoos, for example, you don't visit often, maybe once a year with kids. So, can zoos be closed? Sure. That's why, when closing museums, zoos are usually included. They'll be the first to shut down due to lack of funding. Closures are expected to last about 13 days. Honestly, that's not a big deal, half a month, which still leaves time for negotiations. Republicans and Democrats. Right now, it looks like negotiations are still ongoing. I don't think the negotiations will wrap up that quickly, but do you think it'll drag on and on for more than 35 days? I don't think it'll go that far. Why? Because if it drags on too long, it'll actually affect next year's elections. It's not good for either party. If you make life hard for the people, or if you shut down some important agencies, or if some crucial data can't be released because of the shutdown, it makes everyone anxious. It also makes it hard to judge the economy, the stock market, or monetary policy. There could be some misjudgments, and that's not something anyone wants to see. So I think this whole shutdown issue probably won't be hyped up for too long, because like I just said, if it drags on, it affects people's lives and the economy, and nobody wants that. Secondly, both the Republican and Democratic parties have elections next year, midterm elections November 3rd next. Every party paying attention. Negative sentiment or spotlight means no chance in election. Big deal. His words, Benson mentioned this. What about Trump and Xi Jinping meeting end of October? It's expected at the APEC meeting, there's a chance they might meet in South Korea. Regarding current US-China tensions, easing up, not as severe. Overall, Trump will continue his taco thing. Last week on October 9th, he wanted to slap a 100% tariff increase on China. China responded saying impose export controls 5 types heavy rare earths. You hit me with tariffs, I hit you back. You impose controls, I impose controls. 2 days later, Trump immediately changed his tune tariffs. Remind everyone, yesterday's show spent time reminding everyone. Trump imposes tariffs. You have to remember, when he hasn't imposed tariffs and is being tough, the stock market will drop, right? When the market drops, you should try to buy in batches when prices are low. But when he does impose tariffs, the stock market won't go up, right? If the market does go up when he imposes tariffs, remember, if you bought in when things were tough, then when tariffs are imposed and the market rises, you should take the opportunity to take some profits at higher levels. Other words, maybe on Friday when he was tough, you made some low entry moves, but yesterday was about tariffs, yesterday was tariffs, so US stocks surged. When US stocks surge, what to do? Take profits when prices are high. So remember, wait until he's tough to buy stocks. When it's about tariffs, just remember to sell your stocks first. If you keep this rhythm, then basically, whether Trump is tough or not, you'll easily be able to buy low and sell high. So when he's being tough, look for buying opportunities, and when he backs off on tariffs, the stock market will definitely go up. Remember to sell once first. You need to remember this principle. So yesterday there was a big rally, and I hope everyone at least took some partial profits on their long positions. That's pretty good, well done. Now, another thing is about investment institutions, like JP Morgan. This is really important, because just now, in this. Good night, little donkey, and welcome back. Good evening. Just before this live stream, a student named Mint asked about JP Morgan. They mentioned launching a 10-year, $1.5 trillion plan. What exactly is this about? Let me highlight the key points for everyone. So, JP Morgan Chase, today, their CEO Jamie Dimon said they're launching a $1.5 trillion plan for the next 10 years. From the first sentence, you can tell this is a dream. It's a dream. Why? Because it's for 10 years, and it's $1.5 trillion. 10 years into the future is too long. I can't see what next year will be, and you're talking about 10 years ahead. So, this is a dream, launching a $1.5 trillion plan. Is $1.5 trillion a lot? It's a lot, so it's a dream. On average, that's about $150 billion a year. This dream's future reality doesn't matter. I think, to some extent, some parts might come true and some might not. Anyway, remember that big corporations and the public love to talk about dreams. If the market buys into that dream, the stock price will go up. So here's the key point. What exactly is the dream they're talking about? He talked about which industries he's optimistic about and planning to invest in, just these 4 major industries. First, he said that the reason for this is to rebuild the resilience of America's supply chain, and even to work with India to ensure the enhancement of America's strategic position. He talked about it in a very thorough and grandiose way, making it sound very impressive, like, wow, I want to support America and make America great again. That's why I came up with this 10-year, $1.5 trillion plan. I think he's saying all this for Trump to hear. I believe he's saying it for Trump, to make Trump happy and think, hey, we have a big backer, a major financial group that's willing to support my plan. This investment in America, investing in American businesses, and really committing to this kind of plan for the US. I think he's saying this for Trump's ears, because actually, if everyone still remembers, back when Trump, this was before, last year during the election process, right? During the election, Jamie Dimon from JP Morgan Chase didn't come out to support him. He didn't. Trump also didn't give any political donations, not like some of the tech big shots, for example, like, Jensen Huang, Microsoft, Cook from Apple, or, you know, those who just go whichever way the wind blows, like, who is it? Meta. Yeah, not like Zuckerberg from Meta, who just, Wow, donates a ton, or Amazon, they donate a lot too. Alright, he hasn't made any public statements like that. He hasn't, he's just watching things unfold. He hasn't opposed Trump, but he also hasn't come out to say he supports Trump. So, to some extent, he's kept a certain distance from Trump. Okay, now that Trump has been elected, to some degree, I think for the sake of his company or the future development of certain industries, he has to take some actions to support or show solidarity with Trump. When it comes to action in the tech industry, it's straightforward. Companies like OpenAI or Meta simply invest. Invest in semiconductors, chips, and building factories in the US. Throw in 10, 20, 30 billion, just keep investing. So obviously, they can help Trump save face. But when it comes to financial stocks, how do they help him save face? That's where things get a bit more nuanced, there's a certain finesse to it. How do financial companies help Trump save face and create this so-called Invest in America narrative? And make America great again? They lack factories, machinery, and semiconductor wafer facilities. So how do they invest in America? It's simple, they have the most money. What do? They invest in American companies. That also supports Trump. I think when Xiaomo talked today about the 10-year, $1.5 trillion plan, it's actually more about supporting Trump. What are these 4 major areas they're discussing? You see a lot of news about these 4 areas online, like Bloomberg and many other outlets. Let's keep it simple and just highlight the key points. What the 4 major areas for future investment include? A lot relates to supply chain and manufacturing, key minerals. Remember minerals, like rare earths. For example, things like gallium, things like yttrium, and a whole bunch of other elements. Just remember, key minerals and rare minerals are the main targets for their investments. Aren't uranium mining stocks booming? Like UUUU, UEC, OKLO, etc. Anything related to uranium and nuclear power generation is a future trend. They'll invest in this area due to AI, there's a huge power shortage. Wind or solar won't solve that shortage, they're too slow and inefficient. So what will they use? Nuclear power is the fastest way to generate electricity. Key minerals like rare earths, lithium, and uranium are what they want to invest in. Pharmaceuticals and robotics technology are also major manufacturing industries they want to focus investments on. Remember this. Key minerals, pharmaceuticals, robotics. In national defense and aerospace, they want self-sufficiency to ensure national security and dominance. So, what will they do in national defense? They'll invest in aerospace companies, defense technology, autonomous systems, and drones. Secure communications is another industry Xiaomo wants to invest in. As I mentioned, the energy sector is crucial because energy independence is vital. If energy is well developed, your AI won't face power shortages. Alright, so when it comes to energy, he mentioned companies or systems for battery storage, as well as technologies for smart grids and distributed power sources. These are also his main investment targets. Lastly, he talked about technologies like AI and quantum computing. Quantum computers and quantum computing are really highly regarded. AI helps with cybersecurity, semiconductors, and data centers. When you add these up, he said there are about 27 subcategories. Basically, just remember these 4 major fields. In fact, he's already told everyone that in the future, these big conglomerates, major investors, and banks. Take JP Morgan Chase for example, they're planning to invest $1.5 trillion over the next 10 years in these industries. Some of it might be through partnerships, some through financing, some through equity investments. No matter what method they use, the point is, they're targeting these areas. What does that mean? It means that for at least the next few years, during Trump's term if he gets elected, just focus on investing in these 4 main sectors, it's more than enough. Don't go after other industries, especially the ones he didn't mention. Don't just buy randomly. These industries are basically the ones that already support Trump, or the ones Trump might want to focus on developing in the future, or those that are related to these sectors. That's why they're being highlighted. He's not just mentioning these things for no reason. It's definitely about looking at future industry trends and seeing which direction national policy is heading. For example, national policy might aim to cut dependence on China, so there will be a strong push to develop critical minerals and companies related to rare earths, through investments and partnerships. Take MP. Didn't the US government invest in MP before? Companies like Canadian mining, American mining companies, the US government has invested in them. So, pay attention. Energy, independence. Uranium mining and nuclear power generation, UUU, BC, SN, ROKL, these stocks keep going up. Why? Government policy backing. Since there are policy-backed themes, and these banks and big investors have plenty of money, what do? They definitely look for sectors that have government support to increase their investments and put in more money, because that's how you get a multiplier effect and make even more profit. When an industry has policy support, the future development or trends in that industry are also more likely to be profitable. Remember this. So, just remember these 4 major sectors. In the next 3 years, just invest in these 4 industries and that's enough. It's basically like the research report basically tells you to invest in these 4 major industries. If you grasp 80 to 90% of these sectors, you'll make money most of the time. Quantum computing, energy, critical minerals, robotics, these are the main areas. They also mentioned this $1.5 trillion 10-year plan over the past 3 years. When US and international stock markets surged over the past 3 years, Taiwan's stock market's rise was also related to these sectors. Right? Robotics, AI, electric vehicles, key components, defense drones, quantum computing, and so on, many sectors, including energy and heavy electrical equipment, have all gone up. Many things. In the US, these industries are more advanced and upstream, so there are many potential candidates to watch. So you have to remember, JP Morgan, the big player, has joined the effort to stabilize the market. Is it possible that other companies will join in the future? I think it's likely, maybe Goldman Sachs, maybe Morgan Stanley, maybe Wells Fargo, or even others like Citibank could join. Right now, for example, Bank of America is buying in, because JP Morgan has already said directly that they're going to invest so much money over the next 10 years. The other companies can't afford not to follow suit. So in the future, I think it's all interconnected, just like before when Meta announced investments, Amazon said it would invest, Tesla said it would invest, and then Apple invested in TSMC. Every one of them is investing, making bigger announcements. They're talking 30, 40, 50, 60 billion. Someone might say they want to invest 100 or 500 billion. It's a game of outbidding each other, but as long as you make announcements, Trump is happy. If you announce, Trump's happy. If not, he'll give you a hard time. So, an announcement makes a difference. Bank stocks will follow and make claims too. That's how it goes, so look into this. Over 10 years, $1.5 trillion is involved, and these details are basically open, like an open book. Let everyone know that these industries are the ones with a chance to make money in the future. How should I put this? When it comes to the market or individual stocks, it's enough for us to just look for good targets among them and enjoy ourselves. Good evening, okay, thank you. Thank you all for your support. The 10-year Treasury yield dropped to 4.01, and the interest rate is 3.61. Why? Because Powell tends to speak more dovishly. As mentioned, cutting rates 2 more times this year is reasonable. Of course, the number of rate cuts is now around 1.9 times as well. So, the direction for rate cuts, both this year and next year, is pretty much set. Since that's settled, it actually answers a student's question from yesterday. In this situation, whether you're Irui or not, I'm not sure if Irui is online right now. Lee Irui asked yesterday, if you take some of your profits, maybe profits from stocks, and use them to invest in US bonds, is that a reasonable approach? Well, I think it's doable, but you don't need to go all in. You don't need to go heavy, because overall, when interest rates are cut, what happens? Of course, rate cuts will cause yields to fall, and when bond yields fall, bond prices move in the opposite direction. So, when rates are cut, what does it benefit? It benefits bond prices. The more rates are cut, the more prices move in the opposite direction, they go up. The more rates are cut, gold prices also go up, both of them move in the opposite direction. So you can use part of your money, maybe 20% or 30%, under the premise that the trend of rate cuts will continue this year and next year. You can invest in bonds, because rate cuts are favorable for bond prices to rise. But don't put too much in. Why? Why is that? Because although rate cuts do move bond prices in the opposite direction, when rates are cut, bond prices go up. To be honest, the positive or supportive effect of rate cuts on the stock market is actually greater than on bonds. To put it simply, when monetary policy is easing and interest rates are being cut, the boost and positive impact on stocks is usually stronger than on bond prices. So in my opinion, you don't need to split your allocation 50-50 or even 60-40 between stocks and bonds. There's no need for that. You can allocate around 20 to 30% to buy bonds. Some do this for hedging, like the stock market is high, so they want to hedge. Or maybe yields are expected to drop, or bond rates will go down, so you buy bonds to benefit from price increases. That's also possible. Stock portion, keep it at about 70%. So, it's a 70-30 split. What do I mean by not going all in? You might say, teacher, you said 70-30, so if I have $1 million, I put 700,000 into stocks? And 30% goes into bonds? That's not quite right, that's not what I mean. So what does 70-30 mean? 70-30 means that, given the current index is hitting new highs and is already at a historical peak, you might want to keep 30% in cash. So you might actually be operating with 70 or even 60% of your cash in the market. Whether you have 600,000 or 6 million, or even 700,000, it doesn't matter. Take that 6 or 700,000, and from that amount, use 70%, about 400,000, to buy stocks. The remaining 30%, about 180 to 200,000, used to buy bonds. That's basically the idea. So after you finish buying, after you've set up your portfolio, you'll probably still have around 400,000 in cash on hand. What should you do with this 400,000 in cash? You just wait. Wait for what? Wait for the day when Trump backs up and things get really tense. When the market dips, look for companies and opportunities where stocks have unfairly beaten down. This 400,000 is to add to positions when prices drop, so you can't invest it all. Because right now, whether it's the Taiwan or US, it's the same situation. The Dow Jones isn't at 12,000 points. Right now, the Taiwan stock market isn't at 8,000 points. It's at 27,000 points. It's incredibly high. So you need cash on hand to take advantage of opportunities to add positions when the market dips. Of course, depends on the individual and their own trading habits. It's not necessarily absolutely correct. You can also adjust things according to your own trading habits. We're just offering a method that's a bit lower risk or a bit more stable for everyone to use as a reference. Of course, you should also consider your own investment profile. Alright, what about the US dollar index? Today it went up slightly by 0.17%, staying the same, fluctuating around the 50-day moving average. As for geopolitical risks, a quick look: Egypt, the US, Turkey, and Qatar signed an agreement. And today, there was news, something special. In the speech, don't just quote randomly, don't just quote out of context. Lee Yurue added something good. We answered your question. You asked whether it's appropriate to convert profits into US treasuries. And who was that? Mori Jean. Why is it about US defense? Let me tell you why US defense want a key investment focus in the investment industry chain. Because in the past few years, actually, the development of US defense hasn't been, constantly advancing, constantly improving at a rapid pace, because it felt like the world was at peace, things were relatively calm globally. But then they realized, when China held its big military parade on the 93rd Army Day, or when they developed certain technologies, they noticed something strange. While China's defense isn't as weak as they originally thought. They used to see it as a paper tiger, but unexpectedly, as their military developed, it was like, wow. It seems something is happening, so the US is worried. The US is concerned. In the past few years, there hasn't been an increase in defense budget. So what now? Now it seems they start catching up. If you don't, what happens? If you don't, you end up like, look at Russia. It's like you end up getting sidelined. The war in Ukraine doesn't really pay much attention to the US, and as for China, they don't really care about the US either. In terms of military power, of course, it's really important. Whoever has the stronger force, whoever has the bigger fist, gets to speak louder. So the US is slowly realizing that its military strength isn't as good as it thought. That's why they're gradually making efforts to figure out how to start developing and investing more in national defense. They're making progress. So, what about this going forward? We'll keep talking to everyone about this. There are many defense and military industry concept stocks you can keep an eye on. I'm not talking about Taiwan, I'm talking about the US. Remember, the things in those 4 major sectors I just mentioned are the future industry trends. Now, as for the news about the Qatari mediation team getting into a traffic accident, 3 people died and 3 were injured. It seems that among the dead was a senior diplomat. Of course, there are some conspiracy theories out there. People are saying, yeah, since Israel signed a peace agreement, maybe someone wanted to take out the mediation team to stop the negotiations. While I think these conspiracy theories might be making the rounds, it's not likely that this will cause the talks between Israel and the others to just end, and that Israel and Hamas will start fighting again tomorrow. Because if they did, then what would be the point of having the leaders of Egypt, the US, Turkey, and Qatar involved? Wouldn't that be a slap in their faces? We just signed a ceasefire agreement, and these groups, Egypt, the US, Turkey, Qatar, even President Trump went to speak at the Israeli parliament. If right after his speech, Israel launches missiles and Hamas fires back with some kind of rocket, that would be totally disrespecting Trump. What if you disrespect Trump? Your country won't control things. It'll be a big problem. So I don't think this affects the geopolitical risk or causes a huge stir. Nothing to worry about here. That's why crude oil prices fell today, dropping 1.38% to $58. As for OPEC's monthly report, just look at it. OPEC's reports are usually optimistic and positive because it's OPEC, and they can't paint too bleak a picture. OPEC itself can't say things are bad because it's made up of oil-producing nations. So they can't say oil prices are terrible, that the trend for oil is awful, or that demand for oil is just terrible. They can't say that because they're both the referee and a player. If they did, wouldn't they just scare everyone? Usually, among the three major oil reports, OPEC, IEA, and EIA, these are the main oil reports. You all might notice that OPEC's monthly reports are usually more optimistic. They tend to say that future supply and demand will be relatively balanced, and that demand growth in the future is still pretty good and will remain solid. But the IEA and EIA don't do that. They usually take a pessimistic tone. If you follow them, you'll know. As for OPEC, a quick note, they're maintaining this year's global oil demand growth at 1.3 million barrels per day, and next year at 1.4 million barrels per day. Isn't that odd? Why just maintain it? If they're that optimistic, why haven't they raised expectations? He didn't raise expectations, which means he's taking a neutral stance. Get what I mean? If he was optimistic, he'd raise the global oil demand growth rate. But he's not making moves, no change. Keeping it the same is neutral. Lowering it is not a good sign. If he says, I'm going to lower 1.3 million to 1 million, and next year from 1.4 million to 950,000, that's a disaster. Crude oil prices would plummet, wouldn't they? Because if it crashes, these oil-producing countries would basically be shooting themselves in the foot. That's why OPEC's monthly reports always look pretty good, more neutral and optimistic. That's the reason. Okay, so just use them as a reference, get a sense of things. As for tonight, there's also Bowman and Powell speaking, which could be important. Since our live stream today may run out of time, we won't have time to discuss Bowman and Powell's remarks. Tomorrow in class, we'll cover Powell's remarks. What did they say? And will Ms. Bowman have more dovish points of view? We'll fill everyone in on that tomorrow. Of course, this Thursday's economic data is important, and the Fed's beige book matters too. Anyway, we'll go over all that together. As for earnings reports, tonight we might see releases from BlackRock, JP Morgan, Wells Fargo, Citibank, and Goldman Sachs. And gradually, today, some companies are starting to release their earnings reports before the market opens. So far, looking at the third quarter earnings of bank stocks, there haven't been big surprises, no major disappointments, but also not many results that exceeded expectations. Take net interest income, NII. For banks like Goldman Sachs, Wells Fargo, and JP Morgan, this. Maybe the expectation was $24 billion, but the actual result announced was $23.9 billion. That's the general feeling, it's basically in line with expectations, or maybe just a tiny bit below, just a little bit. It's not like what happened in the second quarter. We saw the financial reports for the banking stocks were very impressive, and they beat expectations. However, third quarter reports from a few companies are either in line with expectations or slightly below. When the more detailed numbers come out, if we have time tomorrow, we'll organize the information. Starting mid-October, a ton of earnings reports will come out, so everyone should pay attention. Let's look at the industry side. Someone mentioned today, Lee Irue said he took advantage of high prices to adjust bond holdings. That's fine, as long as you profit adjusting bonds, it's good. I think, whether stocks or bonds, making money is a good thing. Making a profit is always better than not. Even a small gain is good, and a big gain is better. It's great to make a big profit, but it's definitely better than losing money. As long as you're not losing money, that's what matters. even a small profit is good. In fact, from a longer-term perspective, even a small loss is okay. Whether it's a big gain, small gain, or even a small loss, it's all fine. Why? Because a small loss at most just scratches the surface. It doesn't hurt bones, right? So, since it doesn't hurt bones or tendons, you'll still have a chance to make a comeback in the future. So whether it's a big gain, or small loss, I think they're all acceptable. The scariest thing is a big loss. It's really hard to recover or come back from. That's why I always tell everyone to take profits in stages, cut losses in stages, or make your moves in stages. Don't go all in, and this is exactly why. Big gains, and small losses are all manageable, but once you take a big loss, the pressure is huge. Let me give you a simple example. If you buy a stock at $100 and it drops to $90 and you cut your losses there, you're only losing 10%. Losing 10% is pretty easy to make back from other stocks. It's not that hard. As long as you can catch the trend, making back that 10% in stocks is pretty easy. If a stock drops from $100 to $50, you might say, "Teacher, I lost 50%. You lost 50%. A million becomes 500,000. But to get back from 500,000 to $100, you lost $50, and to get back to $100, how much does it need to rise? You lost 50%, but to get back, it has to double. 50 has to go up by 100%. Only then will it reach 100, meaning you're not stuck anymore, no gain, no loss. That's why we say it's better to take a small loss. You have to get out early, because a small loss is a win, a small loss is a scratch. But when you take a big loss, 50%, to get back to your original cost, you'll need huge effort and time. It might have to grow several times before you can recover. Everyone, keep that in mind. Making a profit is always good. Now, industry side, OpenAI said in the next 4 years, they'll work with Broadcom AVGO to develop AI chips. This news came out September 5th, so it's not new. OpenAI will design chips, and Broadcom will develop and deploy them in late 2026, next year. Computing power? 10G SOCs, it's incredible. We have 8 million households, and then what did they say? By the end of 2029, they'll start working on these chips. This year is almost over. This year is 2025. So what he means is, after 4 years, by the end of the 4th year, in just about 4, almost 5 years' time. This chip take a long time to be fully operational, a long time. From 2025 to 2029, 4 to 5 years. So, this news, though it made Broadcom's stock price jump 9.88% yesterday, that happened? As long as something is related to AI, everyone gets excited. As long as there's any collaboration with OpenAI, everyone gets a share of the benefits, stocks will go up. Right now, the hottest, most popular leader in AI is OpenAI, Altman's OpenAI. So within this big OpenAI family, how does this circle, this perpetual motion machine, actually operate? It's simple. OpenAI needs many chips, right? They buy NVIDIA chips, spending hundreds of billions, even up to $1 trillion. NVIDIA then invests $100 billion in OpenAI. What does OpenAI do next? They might buy from someone else, whoever benefits, for instance, Oracle. They spend hundreds of billions, even up to $300 billion, to buy Oracle's computing power. It's a huge amount. After buying so much computing power, how does Oracle keep up? Oracle must buy chips from NVIDIA to meet the demand. Oracle buys NVIDIA's chips. NVIDIA invests in OpenAI. OpenAI considers its next investment not just answering questions, but buying or investing in someone else, like AMD's chips. It's a connected chain, all tied together in this circle. This idea of everything being interconnected, like a perpetual motion machine, I'm investing in you, you invest in them, and then they invest back in you, and it just keeps going. You might wonder, when is this cycle going to break? Let me tell you, this cycle hasn't broken yet. Anyone who joins is good. Whoever joins, we're all one big family, right? We are family, everyone's family. We're all AI, and if you make money, I make money too. I invest in you, you invest in me, you invest in them, so everyone makes money. When will this big family fall apart? When money can't be split. What does it mean when money can't be split? I invest $1 billion in you, you invest $1 billion in him, and it keeps going. Everyone's investing, everyone feels they're making money. In reality, no company is actually making money, but it feels like everyone is. But what happens one day? Suddenly, in this loop, a company can't keep going. It can't make much money, nor afford to invest another 5 or 6 billion for the next round. Without money to invest, it's stuck. It can't go public or raise more cash. Meanwhile, the market becomes numb to AI development, slowly entering the maturity phase. At this point, when the circle can't keep turning, a company will break the chain. That's a black swan event. If a company breaks the chain, or faces bankruptcy and can't keep things running, what happens to the circle? The supply chain collapses like dominoes, everything falls apart and it's game over. But so far, this hasn't happened. Right now, everyone is working together very closely, extremely closely, in fact. Basically, as long as you join the OpenAI family these days, the stock price usually performs pretty well, because it means there's money to be made. It's basically a guarantee, so joining is definitely a good thing. But everyone needs to be aware that one day, if someone suddenly drops out of this chain, whether they leave passively, go bankrupt, or quit on their own, it doesn't matter, as long as someone exits and stops playing along. If they stop, you have to be careful, because everyone in this big family will be affected. Okay, but that's not the case right now. Right now, everyone is sharing the benefits, and everything is going up together. So, when will the structure fall apart? No one knows when this structure will collapse. No one knows. Since no one knows, you can only adapt as you go. If you profit, take it and run. If you profit, cash out, and when it drops, buy in again. That's the idea. Broadcom. Today's news is good. Yesterday, it went up 9.88%, but still, if it drops again, sell it. There was a long black candlestick at the 50-day moving average, but it held its ground, leading to yesterday's big jump. Just letting everyone know about Broadcom. The perpetual motion machine of AI. How does this cycle work? This cycle is important, and everyone is playing this game, everyone is caught up in this cycle. So far, this cycle hasn't been broken, and in earlier stages, everyone made money. So as long as you join in, you have dreams, you have hope. The most beautiful hope is that everyone makes a lot of money, but you always need to have a measuring stick in your heart. Always remember this cycle. One day, it will break. You have to remember this, you really have to remember, but not now, not right now when things are still good. The iPhone Air. So I actually really like the iPhone Air. This Air is just a thin, light phone, and I think it feels pretty special. He said that before, it couldn't be sold in China because their eSIM card, that is, the non-physical, digital SIM card, wasn't supported there yet. Normally, when we buy and use a phone, there's a physical SIM card, right? But with the iPhone Air, because it's so thin, in order to save space, they replaced the physical SIM card with an electronic SIM card called an eSIM. As for the thickness, well, a lot of people already know about these specs, but the price is about 8,000 to 12,000 RMB, which honestly isn't cheap. And according to Bloomberg reporter Gurman, Apple will also be announcing a lot of new products this week, like the iPad Pro, Vision Pro, and a whole bunch of other things. So, I want to tell everyone that right now, Apple's iPhone 4, S7, and these models are actually still selling pretty well. Whether it's the Polo or the Pro Max, they're all doing great. Of course, the Air model has its fans and its critics, but in the Chinese market, I think it still has its highlights and demand. It'll still have a place. In the past, other countries could sell it, but China. Since September, over a month since the iPhone 17 and above came out, the Air version still couldn't be sold. But now, it's finally opened up. China Mobile, China Unicom, and other Chinese carriers can start using eSIM cards. Starting mid-October, pre-orders begin October 17th, sales start October 22nd. This could mean demand for Air version phone in China will suddenly shoot up, couldn't be sold, now can. Forward, everyone watch. There might be related news this phone mainland market latter half October. News of strong sales and shipments could boost Apple's stock price. Apple's stock went up about 1% yesterday. If you want to buy, wait for a pullback to around the 50-day moving average, then look for a buying opportunity when the price dips. You can always find a good entry point on a dip. The iPhone 17 is selling well, and after consolidation, it still has a chance to make another move higher. That's a little extra info about Apple for everyone. Lastly, let's talk about Tesla. Tesla is the same. It goes up one day, down the next, up one day, down the next. Anyway, just remember that as long as Tesla's CEO, Elon Musk, can focus back on his main business, whether it's electric vehicles, SpaceX, or even things like the brain-machine interface with Neuralink or autonomous robot taxis. Or like with robots, there are so many developments in that area. As long as he manages both his main business and side ventures well, keeps them stable and profitable, the stock price will definitely not lag behind. There will absolutely be a catch-up rally. Just don't get involved in politics. Whenever you hear Musk talking about politics, be careful. If Musk talks politics, close your eyes and sell. If he's serious, like when he says the Shanghai factory will be a treasure, he said the same for the German factory, these are good things. When he says this, stock prices tend to rise. Now, he says the Shanghai factory will ramp up production in Q4, and they'll deliver the 6-seater, the new Model YL. We spent some time this year introducing the car to everyone, and I think it should sell pretty well. After all, some small families need a 6-seater, and it offers more space. Nowadays, some people even use this kind of Tesla 6-seater SUV as a camping vehicle. So, when the new 6-seater model starts being delivered, well, in the first half of this year, Tesla's sales in China accounted for 42% of its global sales, nearly 44%, which is quite significant. So, going back to the main business, I think Tesla's stock price still has a chance to go up, but just be a bit cautious. Because in the short term, the stock has already surged. The previous high was around $470, and just yesterday, it jumped 5.12%. This surge is news of China's plan to increase production. But keep an eye on the 20-day moving average. The monthly moving average has been broken. In the short term, it will correct downward. After such a big rise, a pullback is normal. Look for a lower entry point. Where is that entry point? Let me give you direction. Do you see this area, end of August and beginning of September? Was there a gap up here? There's a support zone near this gap, so look for a buying opportunity around here. I think that's a safer move. This gap might get filled. Why is this gap important? Why look for a buying point when price comes back to this gap? Because this gap happened right at the beginning of September, when Elon Musk made an announcement. He spent, how much did he spend? $1 billion to buy 2.57 million shares. His buying range, this is public information from Musk. Musk bought in at $372 to $396. So, if the stock price comes down to around Musk's cost as a major shareholder, you can slowly watch for a good buying opportunity to set up your position. If the price you buy at is about the same as Musk, the major shareholder, at least it should be relatively safer, right? Buying below $400 versus buying Tesla above $470, of course, your risk level is going to be different. So I think when it comes down to this gap, or even into Musk's buying range, it's better to wait and look for a buying opportunity later on. That would be a more prudent approach. Of course, as long as Tesla and Musk keep focusing on their core business and their revenue and profits keep growing, things should look good. Coming up on October 23rd, they're going to announce their third quarter earnings report, actually. It's still worth keeping an eye on. This earnings report probably won't be too bad because there are some factors at play. Demand for automotive products was steady through September, with shipments and purchases continuous. This is because the $7,500 US tax credit ended in September, causing many to rush to buy Teslas. This should make Tesla's Q3 earnings look good. So, let's discuss Tesla, Apple, Broadcom, and related industry news. Finally, let's talk about individual US stocks before market open. Which companies are up in pre-market trading? Domino's Pizza. I wonder if you prefer Domino's or Pizza Hut every time I mention Domino's. To elaborate, Domino's had a good earnings report before market open on Bilibili, its stock up nearly 6% in pre-market trading. Also, Huntington Bank shares was up 3.86% pre-market. Wells Fargo, Citibank, and JP Morgan Chase, all their earnings reports are coming out today. In pre-market trading, those stocks rose between 1 and 2%. Johnson & Johnson is set to release earnings report soon. Stock was up 0.62% in pre-market trading. On downside, Coinbase, Bitcoin, dropped 4.85% pre-market, Freeport-McMoRan, copper, and gold fell 4%. Additionally, companies like Micron, Intel, Robinhood, ON Semiconductor, AMD, Nvidia, Dell, Applied Materials, Synopsys, Tesla, and ASML all saw significant drops of 3 to 4% in pre-market trading. The market has been extremely volatile, so everyone needs to be careful. Whenever Trump takes a hard stance, the market drops sharply. But as soon as Trump softens up, the market surges again. However, after a big rally, if you don't take profits, the next day there's often a pullback due to selling pressure. So it's just been this back and forth. Big gains one day, big drops the next. That's why everyone really needs to be careful with their position management. The Dow Jones Index holds up well, staying above its 50-day moving average, rising 1.29% yesterday. This 50-day average acts as short-term support. The Philadelphia Semiconductor Index dropped nearly 6% 2 days ago but rebounded 5% yesterday. Fortunately, holding above the monthly moving average. Treat the monthly moving average as short-term support, don't let it fall below that, and there shouldn't be major concerns. Lastly, the Magnificent 7 Index increased 2.45% yesterday. Fortunately, it's still above the 50-day moving average. Yesterday, the Philadelphia Semiconductor Index surged nearly 5%, but the Magnificent 7 only rose 2.45%. A small gain, it's staying above key moving averages. Going forward, no matter how 4 major indexes move, remember 20-day moving average. Treat the 50-day moving average as important short-term support. If it breaks below, sell a portion first to ensure safety. The same strategy applies to individual stocks. As long as the moving average isn't broken, you can stay in. But if it breaks below, sell first, because we're in a high plateau area now, not a low zone. So, with Trump in the picture at the end of October and even up to November 10th, and with so many uncertainties still surrounding the US-China trade war, how should we manage our positions and trading strategies? I think at this stage, the best approach is still to be cautious. The overall bullish trend hasn't changed, but when it comes to managing your positions, you still need to allocate them carefully. That wraps up all the related content for tonight's group, bringing you the latest updates before the US stock market opens. When class ends, remember to like, subscribe, and share for us. Finally, I wish everyone smooth trading, and I'll see you tomorrow.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.